And let's start with that point around the central bank's intervention in the FX market. $50 million, a very small number. We haven't seen that level of trade, rather a level of supply by the central bank at its weekly intervention in a long time. So what's the story? What's going on?
Good afternoon, Wole. Today, $50 million was on offer in the CBN window, and $50 million was sold. This is the lowest we've seen so far in the last 1 year. The demand for funds have actually dwindled. This is basically due to the inflows from the FDIs for the purchase of fixed income securities. Also, another factor that has affected the demand for funds is basically the sales of dollars by the oil companies.
Okay, and of course, we are seeing the Naira strengthen. I think another thing that's probably providing some support for the Naira is the increase in external reserves. Your thoughts on where the Naira may go, given the trend we've seen so far? I think we're beginning to see it come under 157. Do you think it's likely to stay there in the short term?
Since mid-October till date, the Naira remained at 155.76 at the WDAS window, except for today when it appreciated 2 kobo to 155.74. My thoughts are that the Naira will continue to strengthen, though marginally, for the next couple of weeks and also till the end of the year due to the various inflows coming into the system from the FDIs and also the oil companies.
Okay, let's move on to the interbank market, and I think there's a story around the liquidity levels which have been sustained, interestingly, over the last few weeks. Can you just talk to us about that, and maybe we'll now move on to how the central bank is likely to react to that. But first of all, what's the story around the liquidity we're seeing now? Okay,
currently the market is very liquid. Opening today, the market opened with about 201.7 billion. We've received lots of inflows in the last few weeks. The inflows received include the federal allocation funds of about 277.4 billion. We also received cash call funds of about 60 billion, and also the inflows for the funds intervention of 17.6 billion. This is aside the other minor inflows received, which could actually sum up to over 100 billion. During this period, the only outflows we've seen basically is the debit for the Naira sales by the CBN, which is estimated to be about 95.5 billion, and also the debit for the bond sales, which was 75 billion, aside the net inflows from treasury bills, which isn't very high. So the market has really been very liquid in the last couple of months. In fact, currently, overnight is trading at 12% today. Before now, yesterday, the market traded at 11.25%. The slight increase between yesterday and today is due to the resumption in sales of OMO bills by the central bank. About 80 billion was on offer today, and this was oversubscribed to the tune of about 89.11 billion, with range of bids of about 13.9% to 14.25%. However, the CBN only sold 77.1 billion. This is at a stop rate of 14.05%. This clearly shows that the market is still appetite in the market is very large, as people are willing to invest in any securities higher than 14%.
Very important point you're making there. But let's move on to the link between the FX market and the interbank market. How much, we only saw $50 million sold by the central bank, so that suggests that the interbank market is probably awash with FX. But typically, what's the impact of the FX market on the interbank market in terms of the Naira outflows as a result of bids for FX?
As long as we continue to see inflows into the FX market from the FDIs and also the oil companies, the demand in the FX market will remain low, and as a result of this, liquidity in the Naira market will still remain high, unless the CBN plans to issue more OMO bills to mop up this liquidity.
Right, I want to move on to a different point entirely here. Of course, everyone knows about LIBOR in the international markets. Now, we all do have our own index, NIBOR, for the interbank offer rate. How relevant is it in the scheme of things and how business is done in Nigeria, in your view?
The NIBOR is basically the reference point in the interbank local currency market. Basically, the NIBOR is an average of what market traded for that day. it cuts across what market did that day. So basically, the NIBOR is a reference point because it gives you an average of what markets did, which is an indication of what is obtainable in the market.
Right, but to what extent is it, if you like, important? I mean, to what extent do businesses, for instance, reference it, or is this just something that just indicates where the markets are, and it's something that's more useful to traders, or is this something that is probably more relevant in the scheme of things for businesses, in your view?
It is relevant to the scheme of things. By the volume, by the rates of the NIBOR, you can tell what is happening in the interbank market. Okay, for instance, let's look at the start of October, when the market was up about 308 billion. We saw rates at levels of about 10.75%. This is to give you an indication of how level the liquidity was. At a point this month, when liquidity really dropped to about 65.1 billion, which was about 16th of October, just before the FAC funds was received again into the system in October, we saw rates spike as high as 14%, even though this has been the highest we've seen in the last 2 months, because the highest so far was just in late July/early October, which was just after the CBN increased CRR for banks from 8% to 12%. At that point, the market was very, very illiquid. So we even saw rates spike as high as 35%. So clearly, the NIBOR being 35% at that point in time shows you that the market was very illiquid. But currently, the market is very liquid. So rates are actually trading at about 12%. So the NIBOR is supposed to give you an indicative of how liquid the market is.
Right.